Good afternoon, everyone. Today's Monday, the 12th of December, 2011. This is Brian Shannon speaking. Let's take a look at this market here. We are, of course, looking at Realtick charts here. Realtick is the trading platform and the charts and analysis that I use each day. As far as I know, it's the best trading platform out there. I've looked at other ones in the past and haven't seen anything better. So I would encourage you to go to realtick.com and take a look at what they have to offer. The S&P 500 did pull back a little bit here today, down about 1.5%. You can see it did come down intraday just above that 20-day moving average, and we still have this 50-day moving average, which is advancing from just below. However, we know that we do have a declining 200-day moving average, which has been acting as resistance, and that resistance is also formed pretty strong against this trend line. So I don't think we can look at this as a failed move yet, but when we look at the 30-minute time frame, actually let's look at the 10-minute time frame. But because what we'd seen is Friday's rally that kind of got us back up above this little 124.80, 125 level. That rally on Friday, what we're talking about in the close, it was nice to see it above the 5-day moving average, but we were hoping for a pullback maybe and then a push higher that would go something like this. That's the scenario that we were hoping for. Obviously, the market didn't give us that. We saw weakness, and then we saw that weakness continue through about midday when we turned sideways, and then at the end of the day, of course, we did get back above that volume weighted average price here and finished actually with a pretty decent move here in terms of relativity to what the average price the market traded at today, which is the volume weighted average price, of course, down at 130, 28.30, 123.86 approximately. So the 10-minute time frame, what we have here though, we have to look at it objectively, is we have this high, then we have a high that came in lower. We had this low and we're looking for a pullback to hopefully create a higher low. Instead, we got a lower low here. Now we did close above Friday's low, not really a huge important thing, but the daily time frame, we've got we've got a Fed meeting coming up, we've got options expiration on Friday, but the daily time frame is still holding somewhat constructively. What we don't want to see is a continuation of these lower highs and lower lows, and I think it's too early to to get aggressive on any buys. You want to take it stock by stock in here, and we're still within the potential for a recovery here on this daily time frame, and the market's going to have to figure it out pretty quick here before the end of the year. We've got very few trading days left. I think, what is it, about 2 weeks, 2.5 weeks maybe. The NASDAQ was down 64 cents, about two-thirds of it, or 1.1%. Also got down to that 20-day moving average intraday. I don't know if that's more of a coincidence or whether we have buy programs around that level, but this is the second time that the 20-day moving average has kind of saved this market here recently. On that 10-minute time frame, we're still holding, I guess, above that 56 level, and that's the key level that we've been talking about, is $56 a share. We've been talking about $56 on the Qs for several, a couple months now actually, because it's been a big battleground. That support broke, it acted as resistance short term, and then really flushed the sell orders into the market. Now we're seeing it continue to hold up above that 56 level, above the 20-day moving average, and those are good things. And we're basically right on the 50-day moving average here as well. I will repeat that this daily chart of the Qs continues to be just a big giant mess, but we do have that 50-day moving average up through the 200-day moving average. I don't think it's a buy signal when you have this much noise on the chart, but it's worth noting anyway. The semiconductors, these guys were down 1.4%, still holding above the lows from last week, so that's nice to see. Let's take a look actually at frame this again with that 150-day moving average, and if we can break beyond 75, then new highs for since this half of the year seem likely. Maybe not this half of the year, but basically since the low has been made, I think we go on to at least test that 200-day moving average. But let's not get ahead of ourselves because this market isn't recovered yet. We're finding support, which is good. We're holding above last week's lows, so 72 and a half ish, in that area is somewhat of an important important level. But you look at what we have here, and we could take a look even what's the volume weighted average price since this gap higher. We're still right below it, and it's right at that 5-day moving average. So that kind of adds a little bit of significance up near that 74 level. The daily time frame, it looks fairly constructive, but it's too early to really do anything with it right now, other than observe that it is holding on and possibly setting up. The semiconductors continue to be the weaker group. They were down 3% today. That's typically not good for the NASDAQ. So we want to keep a close eye on these semiconductors and make sure they don't continue to bleed off. Perhaps they come down to this trend line if they're going to. If we take a look at the Fibonacci on here, from the recent lows to the high, that recovery that we've seen, this group has clearly been the laggard here, dropping more than 50% of this recovery attempt in here, and still has that pattern of lower highs and lower lows. So on Friday, we saw the market rally impressively off a gap lower up to this prior support at the declining 5-day moving average. And had you held over the weekend with that, then that's that would have been a good trade. Obviously, but we still have these lower highs and lower lows. The semiconductors did close above the volume weighted average price, but the declining 5-day moving average with lower highs and lower lows kind of negates that. The declining 150-day and declining 200-day moving average kind of negate that as well. So the semiconductors are really the messier area, and I wouldn't spend too much time focused on that, other than to know, maybe if we break below that 61.8% retracement level at about 29.50, then I think the rest of this market will start to pay attention a little bit more to these semiconductors, and it could cause further damage. The financials also had a more difficult day, down 2.37%, but they did close basically right on that, or just above that 50-day moving average. And as we know, that $12.80 level has been the key level for this market, similar to $56 a share on the NASDAQ. So we got down below it intraday, but held up above. So tomorrow's going to be a pretty important day for these markets, I think. I hate to say that, because every day is an important day for the market. But if we can't recover in here and stabilize and get this 5-day moving average to flatten out, we could see a little bit further give up. I don't think that's going to happen, but we have to be prepared for anything here. I'm more looking to be neutralish to wanting to find a reason to be long, but those reasons just aren't there yet. We spoke about Google and Google gap down. It's still not above that bigger level at about 630 or so. I think you get Google above 630, that's going to add some motivation to the buyers. So still a real mixed bag out there, and unfortunately, when we don't have the clarity that we're looking for, it continues to broadcast the same message to us, which is, just take it easy and don't try to, don't push your luck here into the year end trying to make things happen.